Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Before I get started, I'd like to make it clear I'm not a financial advisor. Everything I say is for informational, educational, and entertainment purposes. Technical indicators like those I use here are not accurate 100% of the time. Company fundamentals and macroeconomic factors can drive share price changes in a company differently than what we might expect based on technical indicators. My goal is simply to bring these companies to your attention so you can decide for yourself whether or not they're good investments for you. So please, if you plan on investing, do your own due diligence before purchasing shares in any company or consult with a financial advisor. Well, it finally happened. Apple has fallen into all the indicators I use for possible shorts. Now, I know this will ruffle some feathers out there, most likely. Apple is more or less a sacred cow to many people, and only a fool sells it, right? Well, let's take a look. In case you aren't unfamiliar with Apple, which I find hard to believe if you're watching a channel like this, but it is the largest company in the world. It is a tech company. You can see Schwab categorizes it as technology, hardware, storage, and peripherals. It is a large cap. You can even say a mega cap. It is the first company to cross the $3 trillion threshold. In fact, I believe it was the first company to cross the $1 trillion and $2 trillion thresholds as well. And here we have the annual chart for Apple. And you can take a look. See, it's had this amazing run up over the course of the year. It is just a straight and pretty narrow upward channel. That's an impressive move, I have to say. However, even the best company in the world can't go up forever, at least not short term. I would say it can continue to get higher and higher share prices over the course of years and decades, but short term, there will be pullbacks. And after this giant run up, where we just reached a new all-time high, which looks like it was just shy of 195, it does look like Apple could be set for a short-term pullback. And if you were to zoom in here on the chart, I don't know if you can see it here on the annual chart, there is a gap here from about 189 or so up to 191.5, thereabouts. And as we know, gaps tend to act as magnets, drawing the share price back to fill that gap. They say 90% of gaps fill. And here we have a gap, a company setting an all-time high and possibly getting a bit overextended. And if we look down at the RSI is in the overbought zone and is falling. Both stochastics are overbought and falling. The volume has predictably been much more green than red lately, and we finally got a change from green to red, and the MACD looks like it has formed a peak. We just need confirmation that it is falling back towards zero again. So this setup is semi-expected only because, as I said, it can't go up forever. And if we switch over here to the fundamentals, we can just get a brief overview for those who may not have spent much time looking at Apple's fundamentals. There's very low short interest, which is not surprising given the euphoric market sentiment. The debt to equity ratio shows that it has more debt than 85% of its peers. And I'll note here that E-Trade uses the phones and handheld devices industry instead of Schwab's technology, hardware, storage, and peripherals industry, for what that's worth. But the fact that Apple has more debt than others is not concerning. They also have more cash flow than most other companies in the world. So the fact that it has more debt compared to its peers is not concerning at all. The PE ratio is higher, and normally I would say this is an indicator that would support the idea that the share price might be overvalued. But if we move on, you'll see that these other metrics are good, if not outstanding, and therefore it could justify this PE ratio. So we take a look. The gross margin is higher than 69% of other companies in the industry, and the operating margin is truly outstanding, beating out 98% of other companies in the same industry. And if you think that's good, return on equity beats out 100% of other companies in the industry. Growth rate is average, and well, here's the dividend. It's insultingly low. I almost wonder why they even pay a dividend, but it is pathetically low at 0.49%. If you're buying Apple, well, let's face it, you're not buying it for the dividend. You're buying it for the growth. So in any case, I should be very clear that I am not bearish on Apple in any way, certainly not long-term, but short-term, it does feel like Apple should pull back. I mean, at least it would seem reasonable, at least pull back to this 185 area or so, if not further. But please, if you have an opinion on Apple, and I'm sure most investors do, feel free to leave those comments below. I would definitely like to hear other opinions on the matter. And if you got something out of the video, I'd appreciate it if you'd hit the like button and subscribe to help out the channel. If you enjoy these brief overviews of companies that might be good swing trades, please leave a comment for me for the YouTube algorithm. And even if you'd like to tell me what I got wrong, you can leave those comments below as well. They help too. Or if you'd like me to take a look at a particular company using the indicators I present here, mention that in the comment section, and I'll try to get to it as soon as I can. That's all for today. Thanks for watching, and good luck with all your investments.